Local players are looking for more liquidity in the Mexican market. So we need liquidity providers, and those liquidity providers may not be in Mexico. So by having the future contract in CME with a wider audience and market participants, they will help to provide liquidity to international players as well to local players. So we are connecting those liquidity pools now. Enhance liquidity for local participants by using the distribution capabilities from CME.
What are the goals of launching the E-mini S&P BMV IPC index futures?
For us, it's very important to place our benchmark index for the Mexican stock market, which is the S&P IPC index. That's the benchmark for Mexico. That we have a future contract that is trading in MexDer, as well as ETFs in the Mexican Stock Exchange, but by far is the most widely followed index for Mexico. So this is one step forward to have that index traded also on international venues, and that's why we are so happy to have CME partnering with us and listing a future contract on that index to trade side by side with the one that we have locally in the Mexican exchange. So it's to expand the level of access for international players in the Mexican market.
How did CME Group and S&P Dow Jones Indices collaborate on this product?
We started collaboration effort with S&P Dow Jones Indices close to 10 years ago. This has been very important to adopt international practices when calculating our indices. It's not only the IPC S&P, but also some other sector indices that we have in Mexico. So that the alliance with S&P helped us to improve the quality of our governance on the calculation, distribution of our indices. So now that is a very well-established index in Mexico, very well-established globally as a benchmark. Now, by putting the future contract in CME, we are aiming to provide more participants access into that. So we would connect the local buy side with the international liquidity providers.
How is BMV Group driving international growth?
We are looking is also to grow the liquidity in the cash markets. So we are seeing what we can say like a spillover effect. So more participants trading this index 23 hours, 6 days a week. Hedging needs will be created, and that hedging need will also increase liquidity in the underlying securities listed in the Mexican Stock Exchange. So it's a virtuous circle between futures, ETFs, creation of baskets, and arbitrage between MexDer and CME. So we see that as a very powerful idea to increase liquidity in the whole Mexican ecosystem.
What are the differences between the contracts traded in Mexico and the U.S.?
The time zone is pretty much the same, right? The CME contract is smaller than the Mexican contract. So that's why this is branded as an E-mini contract in the CME category. So that will allow also to have some more friction, that will allow ARBs to be able to quote on both markets at the same time. So it's the same contract, maturity is the same day. The biggest difference is the tick size and the multiplier. So the CME contract is smaller than ours. And it's important to mention, John, that both contracts are Mexican peso denominated. That's going to be also interesting because CME will settle this contract in Mexican pesos.
Do you have options on your contract?
We do have options listed in the Mexican Derivatives Exchange. However, the liquidity is very low. That's something that strikes us. We are going to create additional programs in the future once we have a better liquidity established in more markets to enhance the market making on the Mexican volatility market. We know it's big, but so far there's a lot going on in the OTC markets. So we believe that by having this liquidity enhancement in Chicago and in Mexico, the next step for us will be to create more liquidity on the options as well. So we have them listed in MexDer, but very little activity.